From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon and welcome to the COB, everything you need to know in the day in business and markets. I'm Kyle Rodder with, my wing woman as always, Danny Akey. I missed you yesterday, Danny. It was all by myself. I didn't know what to do.
All on your lonesome.
Yeah, exactly.
I should have come in just especially for the COB.
Well, for future reference, if you wouldn't mind, that would be very, very nice. But let's take a look at the market because we're in a good mood and, well, investors are in a slightly better mood than what they were over the last 3 or 4 days, up 0.77%. For the session. So obviously still been tough over the last 3 or 4 days, Danny, but
absolutely.
I suppose any recovery has to start somewhere and one hopes that perhaps it's today.
Yeah, absolutely. And we might run through the sectors, but very much buying in those major sectors, materials and banks, which of course will move the index because they occupy, well, combined financials and materials and like almost 50% of the index, but also REITs were on a tear, but we might get to that later.
We certainly will, and it might be a good way to segue into our 3 themes for the day, and I'm the poet, I didn't even know it. But the
That's
3
an
themes,
oldie.
It is an oldie. I got it from my father. But let's get to the 3 theme, shall we? There we are. Breaking Bad. We had 4 days in a row of some pretty sluggish trading, and we've managed to finish higher. But how are you feeling? It's a question that we have to ask all of ourselves at the moment. Sentiment data out today, the weekly ANZ Roy Morgan figures. A little better than expected. Well, not better than expected, better than last week, but still showing that households remain in the doldrums.
Correct. And that's really sums it up, doesn't it? It's still running at very, very, below average levels.
Yeah. So
subpar. I can't remember. There were 2 surveys and my brain's got a little bit confused as to, because in terms of insolvencies, they're running back to levels since 2015. And I can't remember, I think consumer confidence, was that back to levels in the 1990? I think it was.
It was the longest streak below an 80 reading.
Yeah.
It's the longest streak below 80 in 32 years.
Well, there you go.
17 consecutive readings that we've been below 80.
Yeah.
And that hasn't happened since the recession that we had to have.
Exactly.
Although, so I've been told anyway, I wasn't there to have it myself. Last but not least, finger licking good. I had to chuck that in there because apparently we all like to eat KFC.
In a recession? We don't have a recession yet.
No, not yet. Not yet, but we'll wait and see. But, even though, different stages throughout the year, Collins Foods or KFC, they were whacking cabbage on your Zinger burgers. Didn't seem to matter particularly much. People still pretty happy chowing down on some fried chicken.
I was telling somebody, I remember when KFC came to Australia.
Indeed, okay.
And it was very exciting. It came to Double Bay in the eastern suburbs, and that was exciting, in the 70s. When I was very young, we would go until, they won't like me if I say this, but there was a scare that it was rabbit, and then they went through a little bit of a lull. But my point of the whole thing is that a lot of people trade down to the likes of Kentucky Fried Chicken as opposed to going out to a restaurant. It's like, let's get KFC, have a movie at home. Yeah. It's a lot cheaper, so mum or dad doesn't have to cook.
Yeah, and we'll continue to trade down to rabbit apparently if things get really tough. But
don't say that. They won't like me.
They won't like you. Or my grandmother said they used to wash the chickens in turpentine. That's what they used to tell me. So no, we're not getting KFC. They wash the chickens in turpentine. I don't know why she used to tell me that. Anyway, so there we go.
To get the feethers out.
Is that right?
I have no idea.
We'll put that to Collins Food if they ever actually agree to come on now, which, if we keep going like this, probably not. But let's get to the sectors of the day, shall we? Here are the banks. You spoke about that, Danny. We can't go anywhere without their support and some broad-based strengths there. A bit of a bounce again.
Absolutely. And if one was a cynic, one would just remind everybody that financial year end is on Friday. So there might be a little bit of what's called window dressing. We'll have to wait and see over the next few days.
And we'll pick that topic up in a second, I think. But let's go to the miners now as
again.
Well. Another bounce. Let's see where these names are sitting because, they're off their lows to be fair. So not that the entire China trade has been unwound, but it's probably lost a little bit of momentum.
Totally.
Fortescue back towards $22. That's nothing to sneeze at necessarily. We're also actually seeing some continued strength through the gold miners as well. So after the events of the weekend, that seems to have supported perhaps at the margins gold, I speculate. Also topical energy.
Yep.
Mixed, but collectively higher for the day. So those cyclical areas of the market, bouncing back just a little bit.
Absolutely, and I have to correct myself because I said the other day Woodside Energy is predominantly gas, and Dumbo here forgot that they'd bought all the BHP oil assets.
Yes.
So you can no longer say that.
Well, I didn't correct you, so obviously I didn't know any better either. But there you go. That's just correcting the record there on the COB. But let's get across some of those corporate stories of the day. We already spoke about Collins Foods. I don't know how deeply you dug into the numbers, but on the surface, if you looked at them just from the report, they weren't great year over year, down 70% in terms of net profit. I think revenues were up 14%.
Yeah.
I don't know, do you feel like this is one of those situations that we've just aired so much of the bad news that
Correct.
the bar set low and off we go?
Yeah, a couple of people commenting today, just so much of the narrative about being a discretionary retailer and it's all going to be horrendous. So really a case of one needs to look under the hood and be really to separate out because not all the businesses are the same. So I think some people felt not as bad as expected.
Indeed, okay, and we'll get to the leaders and laggards at the end, but Collins Foods certainly on there. Sonic is another name that we wanted to have a look at just because it did
acquisition,
acquire,
didn't they?
It did, a Swiss company. So this is obviously a yearly chart there you can see, but the stock was up about 2% by the end of the day. So investors welcoming that news. I think it was for a purchase, or the value was for, the value of the purchase, I should say, was around $167 million if my memory serves me
Synlab
well.
they bought.
Synlab, there you go.
Yeah.
So you can perhaps confirm the number for us, but I think it was about 167.
I'm just trying to find the number.
No, I think it was around about that. But nevertheless, investors welcome that news. And Star Pharma, you're saying that sometimes perhaps investor favourite, also in the news today?
Yeah, I just want to check that because I did read earlier that they they're off about 10%. So one of their clinical trial updates has effectively been halted. And so I think it was off a lot more earlier on. But a voluntary partial clinical hold has been implemented on a trial in which Star Pharma technology is used. And it is whatever AZD, etc., monotherapy or in combination with patients with advanced hematological malignancies. Anyway, so that is obviously not a positive for that company.
It would seem so. And last but not least, we did want to talk about the REITs because some in the news today, at least in New South Wales, around development and construction. I don't know if that had any sort of bearing on the share price necessarily, but it was something that I know that you were sort of mentioning quite a lot in the newsroom today. Yeah,
there was a bit of a combination. So I was just interested to note that yields on Aussie bonds have actually dropped today, which is interesting because the Aussie dollar is actually quite strong. But also Premier Minns in New South Wales is putting in place legislation to make it easier for developers to go 30% higher in buildings that are $75 million and above, as long as they subsidise, I think it's about 15% of the homes in those buildings.
Nice.
So clearly very much aimed at trying to alleviate all these housing shortages, which apparently we have. Although I'm not convinced, but we were discussing that earlier.
I did hear you screaming across the room, not in my backyard, Minns, and
well,
so
not
on
in
and so
heritage
forth.
areas. No, you can't start knocking over 150-year-old terraces in the oldest part of Sydney.
Okay, well, there you go. Some editorial there, and always welcomed, of course. But last but not least, the stock that we did want to look at was Medibank.
Oh, okay.
Also in the news today,
Government
just around
intervention.
Yeah, with APRA needing to put some capital aside, and this is sort of a bit of an extension from that cyber attack that it experienced last year. So obviously topical for all businesses. I think it was a theme there for a little while in the ASX that everyone was scrambling to make sure that their, risk management around these things was up to scratch because, there was a few that succumbed, or at least Australian businesses that succumbed to cyber attacks. But obviously now we're seeing a little bit of a fallout, Medibank experiencing that today. Mm-hmm. Indeed. So that was, in fact, our stock of the day. So let's listen to what our guests had to say about Medibank.
Showing it returning negative 0.1% a year, so let's say no growth, no return, zero.
Yeah.
So why would you buy it? Now, if you want to get a 10% return, which by the way, 10% is not a really high return, particularly in an environment where we've got 6% inflation, you couldn't pay more than $2.90 for it. At the moment, it's currently $3.58. So it would have to go down, quite a ways to be able to even get a 10% return. So I have zero interest in it. It's a mediocre company.
A bit of a nervous market at the minute, particularly coming to year end. There's a lot of worries, over macroeconomics, the consumer. The one thing we know is that, health insurance like this, it will be steady. You'll get your government mandated 3 to 4% increase every year, and it'll tick along. I agree with Mark, though. I think the market's paying too high a price for that defensiveness. It's about 20 times earnings. I think it's a sort of business you'd like to probably buy about 15 times earnings. If you equate that to the dividend yields, about 4%, you'd probably like to see that get up towards 5 and a bit.
Okay, so I got the sense Mark didn't like it very much.
No.
Mediocre company, he called it.
Yeah.
But Luke was a little bit more...
he was lukewarm at these levels, shall we just put it that way?
We will
So
put it
nobody
that way.
racing to buy the stock at the moment.
Indeed, and I suppose today's news doesn't give you any sort of reason to necessarily buy in, I guess. But nevertheless, let's get to our guest for the next 10 minutes or so. Martin Crabb from Shaw & Partners joins us at the desk, as he does every Tuesday, almost anyway. Martin, great to have you.
Good to be here, Kyle.
Much of a view on Medibank by any chance? It was our stock of the day.
No, not one I really get excited about. I think if you're going to be in insurance, you want to be in general insurance or one of the brokers, because the rate cycle's hardening, as they call it, which means basically you have to pay more for your insurance. So we like QBE, we like Suncorp, and I think if you're in the smaller mid caps, you probably buy the Steadfast and Aus Brokers and these guys who get the uplift from the insurance premium without all the underwriting and investment risk that goes with it. So they're very popular in the small cap managers. They really love those stocks at the moment, but health insurance just can't get excited by it.
No, indeed. But let's shift now to manufacturing PMIs. Have we got some flash PMI data out for? I think we've got a chart there in terms of some data. Do we have that chart?
Yeah, so the early reporter, this flash PMI comes out before the end of the month.
Right.
And it comes out for the US, Japan, Australia, Eurozone, France, Germany and the UK. So not every country, but that comes out a week before the end of the month, and it's usually a pretty good indicator as what the rest of the PMI, obviously China and other countries come out later. I think China comes out on Friday. But it's just giving us an indication that manufacturing activity slowed appreciably this month. And so we had a blip in global manufacturing activity as China was coming out of lockdown. That kind of dragged the rest of the world with it. But just the data on Friday was horrible. Then we had the German IFO data out last night, which is another survey of business expectations, and that plummeted as well. So Germany looks really sick, and that's, everyone says, well, who cares about Germany? But it's a big exporter to China. So a big auto exporter, big, high precision engineering, that sort of stuff. So a lot of that stuff's done in Germany. So it's kind of a window into China. And look, Xi Jinping came out today and said he's pretty confident they'll get their target. Well, of course, they always get their target because they make the numbers up. But we basically got this, I suppose, corroborating evidence that China's slowing in the German numbers as well. So just this sort of, down leg that everyone's expecting in earnings looks like it's going to happen, even though we've had a couple of stocks in the past 24 hours that have beaten on expectations in Australia, being Metcash and Collins Food. It does look like there's another leg down in global activity.
Indeed.
Certainly does.
Yeah, so just on that, I suppose, tying the Metcash and the Collins Food story into things, because, obviously we're all feeling reasonably cautious when it comes to anything exposed to Australian households.
Yeah.
I mean, is there any signal to infer from these results, perhaps?
I mean, for years, analysts didn't have to worry about inflation in their financial models, right? Because there wasn't any. So you didn't have to split out volume and price. You just had sales going up by 5 or sales going up by 10. You didn't really care how they got there. I think in the current environment, stripping out volume and price is really important. So Metcash, for example, IGA, which is their supermarket chain, had 2% like-for-like sales growth. Fantastic. There's 8% food inflation. So that means the volumes are going back by 6%. So unless you think food inflation is going to stay at +8, then the volumes are going to fall away. KFC, first 7 weeks of this year, I think their revenue's up 12, but prices are up 15. So volumes are down. And again, it's this way, okay, the price goes up, I need to buy less Zinger burgers. And it's like, put that in your model. Unless you think KFC can stick their prices up by 15% a year, it means the earnings are probably going to be lower next year rather than higher. and yet the stock's up 20% today. So it's like analysts looking at, well, that's a beat. There's much higher revenue than I thought there would be. I better upgrade. But you've got to look through it and look through price and volume. So they're giving completely different messages. And all the data we're seeing, so I think I showed last week the ANZ card spending. I think NAB produced their card spending. CommBank produced their monthly card spending data. They're all showing the same thing, which is Aussies have stopped spending. In fact, consumption is probably lower than it was a year ago. So we've got a retail sales number on Thursday. That doesn't look like it's going to be a good number. So we've got inflation tomorrow and then retail trade on Thursday. And that's going to feed into the RBA next week, right? So if they're softer numbers, we might see a pause. If they're higher numbers, we might see a hike.
Yeah, and we've got the inflation, the monthly inflation
that's
for May
out tomorrow.
Yeah, I was chatting to someone today saying, well, you can't put too much store in it because it doesn't include
jumps around all over the
services.
place.
Yeah, and also to the year-on-year comparisons, cause distortions.
Yeah.
But he was thinking about 6% for May versus 6.8 in April.
Yeah, which looks like a great result because look how fast inflation's coming down. But we just saw from last month inflation actually ticked up and everyone thought it would tick down. So as you said, Danny, there's lots of volatility in that number. It's a new time series. It's not one they've been doing for a long time. So there's lots of forecasting error in it, but people are still going to read a lot into it either way.
Indeed.
That point on margins you made is so important because I know in the US companies like Procter and Gamble, all those really, really big companies, they've been talking that, they've been able to put up their prices so much to boost their margins, but at some point, the consumer just goes, and it's not going to happen. So there's a real question mark, I think, going into those quarterly US earnings of whether those so-called defensive stocks that have benefited can just keep on doing that, and how the cost side of the equation, because you're right, for years analysts didn't even think about costs, did they?
Yeah. Well, most analysts don't model costs, A, because they're hard, B, you don't get enough information, and it's just a much easier heuristic just to say, right, what's the EBITDA margin? I'll just forecast the EBITDA margin. And if you look at most financial models of analysts in the market, margins miraculously go up every year.
Oh, we're back to that one again.
Into the future, 5% compound growth and a 1 or 2% margin gain, and you get 10% EPS growth. That's your model, right? You used to be an analyst,
yes,
right?
Yes, we've had that conversation. How much should I put it up? Oh, 10%.
That's right, because you always do. So I think there's a case to say, if your revenue is going up by 10, then your costs are probably going up by 10 or more in this environment, which means no margin growth. And if you can't pass your costs on like KFC managed to do, then you're going to be wearing lower margins, much lower margins.
Lower
and
profits.
I don't think that's in people's forecasts.
Interesting. We were having a bit of a joke before about what might be driving some of the price action at the moment. Obviously, we've had the 3 or 4% decline. We throw out our cliches. It's tax loss selling. Now we're sort of window dressing, perhaps. Any kind of rationale around how you're sort of seeing the market behaviour over the last couple of weeks? Yeah,
well, it's been an incredibly strong June. It was up kind of 4 or 5% at one stage. It's given a lot of that back. Yeah, there's a bit of tax loss selling, but I don't think that's as big an issue as it is overseas, because I don't think retail investors are a bigger part of the market as they are overseas and less focused on tax loss selling. But that's definitely a case in small caps. We haven't really seen small caps participate in the rally. It's like today. It's like the banks. It's the insurers. It's CBA, Woolworths, and the miners. That's where all the flow is. That suggests it's institutional money. So I think a lot of investors have probably been sitting there going, look, I probably don't want to be this underweight going into 30th of June because I don't want to signal to my investors that I'm super, super bearish. I probably just need to increase my weights a bit. So it feels a little bit like some institutional cash flow that's going to the market. But outside of that is that the sentiment's still pretty negative out there amongst the investors.
That's interesting.
Makes sense.
Yeah, Martin, really appreciate your insights as always. We'll do it again soon. Martin Crabb from Shaw and Partners. Okay, let's get to the leaders and the laggards. And here are the leaders. We spoke about Collins Foods. Actually, just really tracked highs progressively throughout the day. When I checked doing one of the crosses this morning, it was sort of single digit gains.
Maybe short covering. Who knows?
Well, there you go. So up 17%. That's a tidy little return, 1 day return if you're on the right side of things. Fortescue up. We said before, in sympathy with the rest of the miners, near $22 per share. Now, Ingenia, Scentre and GBT. I can hear
property
you
trusts.
frantically clicking away.
No,
That's
I
part
was,
of
just,
the
I was
REIT.
just curious to see how much Collins Food had actually been sold down, but it's not as bad as some of the others. Obviously Scentre Group and GPT are on a bit of a tear there, which is interesting because, maybe they're just people feel... There was a transaction over in New York overnight where a major building sold at a price that was better than expected, and I think it was an A-class rated building in a great position in Manhattan. I'm just thinking maybe some people have extrapolated out that the discounts that we've seen that some people are putting in for office commercial property are like fully now like discounted in these share prices, and some bottom fishers are coming in.
Okay, that's an interesting insight. So that's, maybe one reason why the REITs were performing rather well today. Let's look at the laggards, shall we, and just see who makes it.
Medibank Private.
There we go. Stock of the day, down
Lake Resources.
4.6%.
That just Lake Resources just continues to disappear from grace, doesn't it?
Yeah, that's just total capitulation, I suppose. Where was it? It was 80 cents when we were
It
talking.
got over $1 at one
over
stage.
$1, was it? Yeah, because it did have that day. It was about 30% lower, and another day it was sort of 15 to 20. So continues to slide.
We spoke about Capricorn Metals today, didn't we?
We did. We put the mods on it by the sounds of things. Down 2.9%.
Some brokers like it. They like the fact that they have quality management, etc. But these gold miners can move around pretty easily on not much news, can't
and
they?
it's an explorer, isn't it? You said so.
These
can be a
they're
bit more
moving to
volatile.
Production. Yeah.
Okay, and Medibank Private, like we said, down 4.6%. So let's get to the small cap laggards, leaders and laggards, I should say, starting with the leaders. And there we go. Nothing that really sort of jumps out to me. Retail food, I don't know if that's perhaps in sympathy with Collins Food. I wouldn't have a clue. But nevertheless, IDOM, let's just see if I can get any news on that, because 35% is always something worth tapping away at to see if I can find any news. And nothing here. I'm sure there's something below the surface going on. 35% is fairly significant. Perhaps we'll push on, just go through the laggards as well. For the small cap space, and let's have a look there. Sezzle. We did actually. We had a chat with Sezzle last week.
Right. So, don't know any of those.
Off by 17.3%, and some of those other names fairly frequent on that list, but ones that there you go. If you're in it, you're in it. There you know. Now you know.
Right.
Okay. Let's get to what's coming up, shall we, in the next 24 hours or so, starting with this evening. ECB President Lagarde speaks. That might be reasonably interesting. In fact, we've got like a panel discussion coming up in the next couple of days with Jay Powell will be there. I think Ueda
yes, he's
might
speaking
be
tonight as well.
Is that tonight, is it?
Yeah,
that whole
believe
panel
so.
discussion, it's this evening. Okay, there you go.
And we've got Canadian CPI, which will be quite important probably because, we're not dissimilar, our economies, and obviously the Canadian Central Bank was quicker to move on interest rate rises than we were.
Yeah, and they paused and then they stopped pausing as well, so a little bit like us. So we'll keep an eye on that because, again, another economy that's seeing sticky inflation, durable goods in the United States, so CB, consumer confidence as well. Tomorrow, though, it will all be about CPI locally. That's, of course, the monthly indicator, and it's expected, at least on the data I've seen, for an increase of 6.1%. That'll be down by 6.8%, but as we noted before with Martin, it is a fairly difficult to predict and volatile little read, although it has been informing obviously markets as well as policy decisions, it would seem, because it has been mentioned in RBA minutes over the last few months as well, something that they're keeping an eye on. Circo AGM, that's the best I could find.
Fair enough.
When it comes to corporate news. But then we get more US earnings soon. It's basically US earnings season again.
Yeah, it'll start up. Is this week or next week?
Well, it's basically, when I see Nike
starts with the banks.
Well, it normally does. That's not for another couple of weeks. But when I see Nike come through, that's kind of like the cloud on the horizon. I'm like, oh, it's going to get busy.
Oh, indeed. Well,
so
it will get busy
Nike's on
again.
Thursday, and that's always a consumer bellwether as well.
Absolutely, and also too about China.
Yeah, okay. So we'll have something to look forward to there when Nike drops results in a couple of days' time. But, in the meantime, we may as well call it there. We've finished up 0.77%, as you can see on your screen. And the ASX 300, following the match out, has finished, I should say, as I just wait for that to generate on my laptop. Up by 0.56%, so slightly more modest, 71.18. There you go. Still nothing to sneeze at. A little bit of a late sell-off into the close, but nevertheless, better than what we've had recently. Danny, let's get going. Remember, you can catch up on all the news and interviews on your website and app. We will see you tomorrow morning.
Bye.